Jeff Badu is be blessing us with some game tonight. So Jeff, I'm gonna introduce you in a second, but just say hello for now.
What's going on, King Jay? How you doing?
I am well. And we have our IG and YouTube audience checking you out. So IG, YouTube, listen, I've been in business, with my street entrepreneur days, it's going on like 30 years, but I didn't pay taxes in those days, so it's irrelevant. Legitimate business I've been in for the last 20 years. Taxpayer. I've been a taxpayer for 20 years. In 2022, my first mortgage checks, I started paying taxes. My first couple $100,000, I ain't gonna lie, Uncle Sam, listen, we gotta deal with that later. But guys, I've learned a lot about business, a lot about real estate taxes, business tax, even wage earner tax, all that as a realtor, and tax mitigation strategy. I don't like the term tax avoidance. I like the term tax mitigation or tax minimization. And we got an expert in the building. I am not a tax expert, but I'm a business expert, and I'm an expert at 5 principles: creating cash, keeping cash, growing cash, protecting cash, and passing it on. That's right, my ears are already set up for the pass on, and I want to give you guys this game on how to keep more cash and protect your cash through the top 5 real estate tax strategies of 2023. And so, my philosophy is be the go-to person in your sphere of influence, but be the expert at hiring experts. So IG and YouTube, I'm bringing on my personal expert, not somebody that is just an affiliate partner or brand out there that's popping, so hey, let's collaborate. No, the guy that's all in my own personal financial business and does it for our family, does it for multiple companies under our entity, a certified public accountant, a CPA, who also I know for a fact deals in the tens of millions of dollars of tax strategies. I know personally because he deals with mine. So just with me as a client alone, I already know what he's dealing with. And it was highly referred to me, and I want to refer him to you. So I'm going to bring up our CPA, tax strategist, expert tax preparer, certified public accountant, Jeff Badu, in 1 second. But I want to give you all some game as everybody share this real quick. This free tax game. Most of us didn't even grow up even understand what taxes was. I know I didn't, King Jeff. I always thought when it was like people said tax write-off, I thought it meant like if I made $100,000 and then I got a write-off because I bought a car or got miles on a car or something else, and I owed the IRS $30,000, that write-off actually went against what I owed. That's what I always thought. I thought my tax write-offs were what I wrote off that deducted what I owed from my tax liability or my tax bill. I then learned that my tax write-off is deducted from my earnings, and it just means my tax bill is calculated on less earnings. So if I earn $100,000 and I get $30,000 in write-offs, it means I still got to pay taxes. I just pay taxes on $70,000 now instead of $100,000 now because my 30 grand of tax write-offs or mitigation strategies, right? It does not mean if I earn $100,000 and I owe Uncle Sam $30,000 that if I get a $30,000 write-off, I don't owe Uncle Sam no more. So that was my hood interpretation of introduction to taxes, where I thought that's what a write-off really was. So people always tell you to get all these write-offs. A write-off don't mean you still don't owe taxes. You still may owe, it just means you have less liability or less taxes to be accounted for, right? So anyway, I want to give y'all that. My last piece of game. This is my Jay Morrison hood real estate corner class to the corner office tax game. I'm not a tax expert, but I learned some things. And I want to give it to you all the way I learned it coming up the last 20 years. Your tax preparers, right? Your H&R Blocks, your run-of-the-mill tax preparers, your franchises on Instagram. A tax preparer is not necessarily a certified public accountant. They are not necessarily someone that is certified or has the expertise to actually give you tax strategy, just because they can prepare your tax forms. Someone that has anybody could then do it, like anybody, any of us, could then become a tax preparer as a hustle. That does not mean they are qualified to give you strategy, to help you with bookkeeping, to help you with proper tax accounting, or any of that. They're just putting your documents together, shipping it off, and getting a check. So, my guy here, the King Jeff Badu, is a tax preparer, But he is also, guys, write this down, because this is this game I've learned. I'm just gifting you. I'm sowing seed. You have your tax preparers. That is probably the lowest on a totem pole, and no disrespect, but just saying of tax experts, right? They're not the biggest experts for us, but they can help us if we know how to do it ourselves. You have your tax preparers, that's one. Then you have your bookkeepers. Your bookkeepers are the ones that help you keep your books aligned, your budgets in line. It's called reconciling your books, and they help you with your profit and loss statement, your personal family profit and loss statement, or your business or corporate veil umbrella profit and loss statements. They balance out your expenses and your earnings, but they also ensure that all your expenses add up to what you actually spent. And they let you know if there's things in your account that's being spent that you don't agree with, or may have been fraud, or something that you didn't want to spend, right? So you have your bookkeepers. Something you should definitely have on your team. And interesting enough, bookkeeper is the only word in the English language that has 3 double letters: BOOKKEEPING, or bookkeeping. So that's another fact for you. Second, you have your tax preparers. We have our bookkeepers. Then we have our accountants, the ones that account for all of our finances, organize it all, make sure it's compliant, look at the strategy and everything else, and make sure that it is not something that's going to get us jammed up by the IRS because we're being too slick. And they make sure that our financial health is in order in our businesses or our personal life, right? So that's 3. So you have tax preparer, bookkeeper, accountant, certified public accountant, right, is what you want. And then you have your tax strategist. Every accountant, Jeff, I learned this, King, every accountant is not a tax strategist. There's a difference. Some accountants can account, but they don't got the tax strategy though. And there's different niches in tax strategy. There's real estate niches, there's business niches, there's some folks that know a little bit of everything, there's professional athlete niches, there's music niches, right? So tax strategy is literally looking at and studying the tax code and looking at all your mitigation, minimization, right, strategies to lower your tax liability, lower your tax bill, which means you're paying Uncle Sam less, and that means you're keeping Mr. Morrison more, right? We want to keep more money for our last name and pay less money to Sam and them, but without causing no friction, no drama, and no beef, right? We don't want no problems in 3 letters, the I, the R, and the S, right? So we do it in a compliant way. So that is my precursor, my appetizer course for you all on taxes. But right now, we're going to get into top 5 tax strategies with our tax expert, the King Jeff Badu. If any of you all want to beat somebody to the punch right now, Jeff is giving consultations, he and his firm, right? They've been around for years now, work at the highest level. I love him because he's professional, he's God-fearing, he has great etiquette, great systems. It's not sloppy how you get your stuff scheduled. It's very organized, and he's affordable. Usually great service comes with a great price. Jeff has great service and a great price. So if you want to jump the line and get a consultation with King Jeff, before he even speaks, just off the strength of my face card, what I just told you guys, you can get it at taxes.jmorrisonacademy.com, right? We got a partnership with King Jeff, my personal tax strategist, accountant, certified public accountant, bookkeeping firm, and tax preparer. He do all 3 in his firm. It's just not him. He has a great team. But you guys can skip the line and get a consultation with them at taxes.jmorrisonacademy.com to tap in for this king. But let's get into the free game, King Jeff, our certified public accountant and expert tonight. Give us a little bit about the Badu firm, Jeff Badu firm, tax firm, and let's get into top 5 tax strategies of 2023. What you got for us?
Absolutely. Appreciate you, King Jay.
Yes,
and appreciate everybody for tuning in tonight. It's an honor and a blessing to be able to be in the presence of, great like-minded people. So I'll just keep it short, right? Brief intro. My name is Jeff Badu. I am a licensed certified public accountant, just like King Jay said. I was born and raised in Ghana, which is on the west side of Africa, and came to the U.S. when I was 8 years old, right? And fast forward, studied accounting at the University of Illinois at Urbana-Champaign, where I got my bachelor's degree in accounting and my master's degree in accounting as well. All right. And so right now, I'm the founder and CEO of Badu Enterprises, LLC, which is a multinational conglomerate in the finance industry. But our main company is Badu Tax Services, LLC, which is the CPA, right? The tax firm that does tax preparation, tax planning, and tax representation for individuals and businesses across all 50 states in the US. And we also have clients that have a global presence in over 25 countries, right?
Big.
You know, we also, yes, sir.
Global business, World Wide Web.
There you go. You know, so in our tax firm, we have about over 3,000 clients in our base. So it's growing. It was founded in 2016 in September when I left my the firm PricewaterhouseCoopers, which was the top CPA firm in the world at the time. I decided to leave, you know, pursue a route, start my own CPA firm, and the next year I started my own real estate investment company. And fast forward, right, due to the grace of God, we currently have 126 units on the south side of Chicago, rental properties, right, apartment buildings. And just provide a stable housing to tenants so that they can be able to live a good life, basically, right? We also do life and health insurance through Badu Life and Health Solutions LLC. And then last but not least, we run the Badu Foundation, which teaches financial literacy to the youth ages 6 through 18. And we're teaching them on topics such as budgeting, saving, investing, and scholarships. And my purpose in life is to inspire and support the super hungry to take hold of infinite resources in order to create an abundant lifestyle.
I love it. I love it. Listen, guys, let me just run that back for y'all real quick. Because we got to edify each other when we're doing amazing work. We're quick to critique each other, criticize, poke holes, all that. But our brother here has clients in 25 countries, 3,000 clients in his database, accounting degree, bachelor's degree, master's degree in accounting, 126 real estate doors. He's a great real estate accountant. We're actually going to do a special just on real estate accounting in a couple weeks, by the way. Also into life insurance, also into financial planning, and also a servant in the community through his Badu Foundation, offering financial literacy. He's a man after my own heart. You can see why we align and why we get along and why he's been such a blessing to our firm and group of companies and our family. And so I'm glad to add value and shed light on the good work you're doing. A lot of times, guys, it's not about somebody's follower count, blue check, or fancy videos. It's about somebody's heart. We judge people off so much circumstantial, surface level stuff. We don't get deep enough and substantive enough and look at somebody's heart and their fruit and their work. Somebody with a 3,000 person client database, 25 countries, 126 doors, working with A-listers, all that, B-listers, C-listers, mom and pop working class, as a tax preparer, all the way to all the financial services, and serving the community in Chicago, coming from Ghana at 8 years old, coming over here and getting out the mud, making his own way. We got to salute you, black man. Salute. And salute our Heavenly Father that has that grace on you, that oil on you, that is allowing you to move at such light speed out here. So give us some game, man. You got your bag up, you got your companies up, you got this conglomerate. Our audience needs some tax strategies right now. Guys, share real quick before we get started. I need some likes, I need some thumbs up. Give this man his applause and some applause emojis. Give some shares, leave some comments, because the information that we share tonight is going to allow to touch somebody else, and we believe in each one teach some. That's why I'm on live right now. He already gave me game. I could have just stopped and held my game. But I'm opening up to my audience because we believe in each one teach some. We can't afford to just teach one. So I need you guys to share this, that somebody might see this that needs some 2022 tax strategies, that might need a tax preparer, might need a bookkeeper, might need an accountant, or might need a financial advisor. Tell them King J sent you. King Jeff, give us one of our top five, and guys, we'll do some Q&A too, so have your questions ready. But give us one of the top 5 tax strategies for 2023. Like, what's something that we should just know? And every family, every last name in America should know this tax season.
All right, thank you, King Jay. And so I do want to kick it off with a quick fun fact. I personally haven't paid income taxes since 2017. Right, just putting it out there. Legally, of course.
This man just said he runs a global enterprise in 126 doors, but has legally not paid taxes since 2023. That's called mitigation.
Yes, sir. Yeah, so basically, so since 2017 was basically the last time that, I personally paid taxes, right? And the reason why is because you always got to remember the tax code was created for you, not against you, right? Tax code was created for you, not against you. A lot of people think that the code is this thing that's meant for you to pay tax.
Right.
When it's the complete opposite, right? It was actually created for you to not legally pay tax.
If
right?
you pay attention, listen, study, or hire some experts that know the game. I want to underscore that point real quick, King Jeff. Think about this, fam. If the IRS wanted us to pay all our taxes, why did they give us a tax code? Why even give us loopholes in a tax code if you wanted us to pay all the taxes? Family, they're giving us the playbook to more wealth. Like, they literally gave us, here's the cheat code. Here's the loopholes. Go. So guys, take notes tonight. Take notes tonight and bring this home. Go ahead, King Jeff.
Absolutely. All right, so let's get into number one, right? Number one is, as a business owner, you gotta go out there, right? We live in this global conglomerate type of world where things are becoming more global, right? So what that means is we're allowed to travel as a business owner, right? So we can take business trips where some people may call them vacations. All right. And so what I can do is basically, or what you can do is you can take a trip, right? Let's say next week or next month to the Bahamas. It might be a vacation for you, but in the world of the IRS, it can be deemed as a board meeting. All right. Because the thing is, we're going out and we're talking about business, right? So one thing you can do is on your business trips, aka your vacations, you can deduct the full cost of your flights, your hotels, your meals, excursions, parties, bottle service, right? All of that stuff, you can be able to write that off by essentially claiming the trip as a board meeting.
I want to get into that, so I'm going to repeat what you said. Go to virtual, make sure everybody heard this clearly. So, and now this could be international trips or domestic trips. This could be Miami, New York, Hawaii, Bahamas, St. Thomas, St. Croix, Turks and Caicos, all of that. Your trips, if you have a business, now you have to have an LLC. Can you be a sole proprietor?
No, with the sole proprietorship.
Okay.
Because the sole proprietorship does not have a board of directors because you are the only board. But an LLC has got a board, right? So even if you're the only member of the LLC, you are the board of directors, basically.
So even if you are a single member LLC, follow me. If you are a single member LLC, you can travel anywhere in the world or in the States for the purpose of having a board meeting, a board trip, and literally write off, and we're going to dive into the details of that in a second, King Jeff. I ain't going to leave us hanging. But we can literally write off our excursions, our jet skis. We might go to the club, a little bottle service, a little of that Jamaican jerk chicken. All that we can write off on our trip for this board meeting and board retreat that we are having out of the country or somewhere on vacation.
Yeah.
So are there things that, can that board meeting, does it have to have more than one person physically there? Can it be you there in a virtual meeting? What's the guidelines to who has to be present and how it's structured in regards to how much business you got to do in order to write that vacation or retreat off?
Yeah, that's a great question, King Jay. So it could just be you, right? You could be the board of directors of the company. Now, usually it's best to bring like a spouse, for example, if you're married to somebody. This would be a great time for you guys to travel together, take some trips. If you got kids, right, they're your board advisors, so it's good to bring them along as well. But it could just be you. It doesn't have to be a whole whole load of people or anything like that. And to properly document this, you basically want to get in a hotel room or on the beach, right, for at least 10 minutes. And you pull out a Word document or a notepad or a notes app, whatever the case may be, and you put 5 pieces of information on that document. The first thing is you want to put it on your company's letterhead.
Hold on, stop.
All right.
Yo,
yes,
if y'all not, so 1 second, Jeff, King Jeff. If you're not taking notes right now, you're just servicing your last name. You are a horrible family CEO. He's dropping the game right now of what you need to do on a vacation as an LLC owner, sole member or not, on how you literally write off your entire vacation. I think, Jeff, can this just be one time or can you do multiple retreats in a year?
Oh, that's a great question. You can do usually up to 4 a year.
Up to 4, what we would call vacations, aka retreats, formerly known as vacations, now known as retreats, 4 a year that you can do
per business.
For a business. Per business.
Per business, yeah.
So if I got an LLC for this property and an LLC for this property and an LLC for this business and an LLC for that business, each one of my businesses get 4 trips a year and I can write off the whole trip?
Exactly. Now, if you're an influencer, though, and you do this for a living, you can take as many as you want per LLC.
As an influencer, and that's...
Right, yeah.
Do you have influence? Do you have a social media account? Do you influence people? As an influencer, you take unlimited trips and write them off per LLC. So King Jeff, you said in order to do this, we could be by ourselves. We could be by with a spouse. If I'm single, which I'm not, if I was single and I want to flew something out, they could be there and we can have a beach retreat, hotel retreat, and we need 5 things written down to make this legitimate. And the first one was?
Letterhead. So your company's letterhead. All right. So you got basically, you got the logo, the name of the company, address, phone number, something that's legitimate. Number 2 is the date and the time of the meeting. So when did it take place? Right. That's very important. If the IRS were to audit you, they could basically verify that, hey, this was the date that I took, that I went on the meeting, and then they could basically match that up. There you go. Notepad, always important.
Listen, I'm a student in real life.
Absolutely. Yeah, so you basically jot down the date and the time of the meeting, and then you want to put down the location of the meeting, very important, where the meeting took place, and essentially who attended the meeting. Right.
All right, so I'm gonna slow you up because this is how I retain information. So in order to make this happen, we need at least 10 minutes on a beach or in a hotel. This is to write off any vacation 4 per LLC as a corporate retreat as an LLC owner, and unlimited if you're an influencer. We need to have a company letterhead, and mind you guys, we have virtual offices that'll give you a business address here at the Legacy Center. Go to legacycenter.com. We can actually give you a business address. So letterhead with business address, phone number, logo, all that. I got plenty of those. So that's number 1 we need to make this legitimate. Secondly, we need to write down where it took place.
So it's more the date and the time.
Okay.
Date and the time, right?
That's easy.
And then, yeah, exactly. Then number 3 is where it took place and who went along with you. Right? And get this, whoever came with you and you paid for them, you get to write off their expenses too.
Wow. You get to write off the expenses or however you flew out.
Exactly.
For the whole trip.
Exactly.
King's been doing it all wrong all this time. 4.
Yes, sir. Number 4 is 3 business items that you discussed during the meeting. All right. So this can be maybe how much business revenue that you generated in the quarter, how much business expenses you generated in the quarter, how many new people you hired, what's your revenue projection for the next quarter, how much are you planning to pay yourself, are you planning to buy a new building, right? So the thing here is the IRS wants you to do this so that you can grow your business, so that you can someday make a lot of money, so that you can someday pay them, right? So they're making an investment in you, so they want you to discuss business so that you can generate more revenue.
And when you think about it, so the IRS wants us to have board meetings and retreats so we can organize our companies better, grow healthy, successful companies that make more money, that pay more to the IRS. But secondly, they incentivize us for retreats, King Jeff, because if they incentivize us to fly out and do these things, we're now spending more money at clubs at souvenirs, at retreats and resorts, therefore circulating the dollar and keeping the economy going as well.
There you go. Yeah, that's the game right there, right? As long as you're stimulating the economy, they're all good. They won't give you any problems whatsoever.
All right, number 5.
Number 5, you sign and date the document. E-signature is fine too.
Sign and date the document. This could be it could be the notes on your phone, a Word doc.
Yeah, it could be anything. I like the Word document one because it's more official, right? I can do a lot of things in there, and I might turn it into a PDF for my signature.
Mm-hmm.
And then you just keep this in your company files, and that's your board meeting minutes. If the IRS were to audit you, then you can say, they ask you, hey, why did you claim this trip as a business expense? You say, here you go. Here's my board retreat minutes. These are my meeting minutes. And they say, oh, cool. Okay, you talk about your business. You went along with these people. Cool, good, right? They check you off. So that's how you remain audit-proof, bulletproof, essentially, when it comes to the IRS tax code.
All right, so family, I told you all 5 tax tips for 2023. That was just one tip.
Right.
We only one in. So I'm going to do my Dre Morrison translation. Here's opportunity for a full write-off of any vacation, nationally or internationally. You need an LLC, and at least to be the sole member of the LLC, if not more members. And you can go on a board retreat as your vacation and pay everything off for the entire 7 days, 10 days, 3 days, whatever. And correct me if I'm wrong, Jeff, at any point. You can pay everything off as long as you have a 10-minute long or so board meeting that has these 5 elements in it. A letterhead of your company that shows it's official and legitimate, get that made anywhere. That you also put in there where you met at, right? The date and time of where you met. Where you met at and whom you met with. It was just by myself. I was on Zoom or virtual with my staff. So I'm on vacation by myself, and I'm on Zoom with my staff, or my girlfriend, or for me, my wife. And the date and time is whatever the date and time is at this resort. So that's 3. Where it took place and who. And then 3, 4, what kind of business you guys are discussing. Salaries, hires, fires, strategies, growth plans, right? Any of those things you want to write down to discuss during this 10-minute board meeting. And mind you, of 4 vacations per LLC or unlimited as an influencer. And then you want to sign and date the document, even an e-signature. And if you do that, anybody you flew out, anybody you flew with, you and the girls on your 40th birthday trip or whatever that is, can all be totally written off of your taxes. It does not mean you don't owe any taxes at this point. It just means whatever your earned income was as an entrepreneur, you can write down that earned income from $300,000 a year, but now your 4 vacations that cost $40,000, you now subtract that from your $300,000 a year of earned income or revenue, and now you pay taxes on a less amount. So you don't pay taxes on $300 now, you pay taxes on $260 or $240, whatever that number is. So that is tax tip number 1 of 2023 by my brother Jeff Badu, who's going to get in number 2 of 5. And remember, if you want to skip the line to get a consultation, then go and book up. I'm telling you that right now. You can see the game. He's a tax preparer, bookkeeper, CPA, accountant, tax strategist. Go to taxes.jmorrisonacademy.com. The link is in my bio on Instagram. Taxes, taxes, T-A-X-E-S dot jmorrisonacademy.com, JAYMORRISON.com, for you guys to get in line and schedule a consultation with King Jeff and his firm so you can minimize and mitigate tax liability this year. Boom. Number 2, King Jeff.
All right, so number 2, and I know you love this one, is the Augusta rule. All right, the Augusta rule, and that's like Augusta, Georgia. Basically, back in the day, there was a conference that was held in Augusta, Georgia, that essentially all the hotel rooms were booked up, right? Everything was booked. And these business owners came together to the IRS and said, hey, can we just host these meetings inside of our homes? right? And claim that as a write-off? And they say, yeah, sure, why not? Right? It's stimulating the economy, and you're talking business, and you're helping grow the business, which is ultimately growing the economy, right? Help me help you type of scenario. And so with that being said, the IRS introduced this code where you can rent your home, right? So let's say I own a home, even a condo. Rent your home from yourself to your business for up to 14 days a year, right? Typically at up to $1,000 per day. Your business gets to write it off for $14,000, and you don't have to pay any income taxes on it because the Augusta rule allows you to rent your home from yourself to your business, or for anyone for that matter, for up to 14 days a year, where you can write it off and you don't have to pay any taxes on it.
Now, do you have to own the home to do it? Can you rent the home and do it?
So you gotta own the home. This has to be something that you own, unfortunately.
Awesome.
It cannot be a rental property or anything like that. It has to be the primary residence.
All right, another perk of home ownership and being lord of your land. The Augusta rule. So you got 14 days a year that you can lease out your house to yourself for $1,000 per day and get another $14,000 of write-offs. So that means, again, you made $100,000 this year and you were going to pay $20,000 in taxes. Well, now you can write off $14,000, and so instead of the IRS looking at you as a $100,000 earner, they look at you now as an $86,000 earner. $100,000 minus $14,000 is $86,000. So now you'll pay taxes on $86,000 instead of on $100,000, keeping more money for you and your last name. All free game.
Yes, sir.
Keep it running. Let's go. Number 3.
All right, so let's talk about number 3. Number 3 is we want to start building our legacies early, right? It's all about our last names, and it's all about what people will remember us for when we leave this planet, right? So one way to do that is to pass wealth down from generation to generation, something that people that look like myself and King Jay don't often do, right? But we got to pass the wealth down from generation to generation. Now, what better way to do that than as a business owner? You got a business, and you have a child who's at least 7 years old, between the ages of 7 to 18 years old. Well, instead of hiring, let's say, a cleaner or an office administrator or office shredding paper administrator, why not make that person your own child, right? Why not hire your child in the business, pay them up to $13,000 a year, where they can use the money for daycare and food and, maybe get a Roth IRA, maybe get into some real estate, right? Why not hire that child in the business, pay them up to $13,000, you write it off as a business expense, and they don't have to pay any taxes on the $13,000 because the standard deduction in the IRS code allows you to earn up to $13,000 in income without having to pay any income taxes on it.
Is that for children, that code of $13,000 a year with no taxes, or that's for everybody?
Yeah, so that's for everybody. So anybody in the United States of America, landed with free home of the brave, can take advantage of this. So if you got like 5 kids, right, you can do this for all 5, so 13, 13, 13. If you got 1 kid, that's $13,000. And man, imagine doing this every single year. Now, talk about a college fund, that's it right there.
Awesome. Now, does the opportunity for us to for someone to make $13,000?
I think the audio might have gone out a bit, King Jay.
Okay.
Maybe it's on my end.
Can you hear me now? I hear you. Can you hear me now? No? Let's see. We should be good. You hear me?
Yeah, we're good.
Okay, cool.
Okay.
So, question for you. If an adult, someone 19 or 20 or 25 years old, if they made $13,000 a year, do they have to pay taxes on that as well? Or just...
Yeah, so if you're let's say you have like a 1099 income, then you do want to make sure you file that because you might have to pay self-employment taxes on it. Here's the game though, as a child, someone who's between 7 to 18, you don't have to pay any self-employment tax. right? And so if you had a W-2 and you earn 13,000, yeah, you don't have to pay any taxes on it, right? But if you had a business and you're over 18, then you do have to pay self-employment taxes. But the game here is to move over to an S corporation so that you don't pay any self-employment taxes. So technically, it is true what you just said, King James.
Awesome. So our children ages 7 to 18. So right now, my 2-year-old Kobe, she don't cut it. I can't put her to work just yet.
Unless she was an actress.
She's a model. She's literally a model for our collateral. She's on our marketing.
Well, there you go. You can hire her.
So listen, this is what I'm trying to say. When you have experts that meet with experts, you come up with expert stuff. So listen. So now the new game is, King Jeff, if we have children 7 to 18, they can do physical labor, cleanup, janitorial, administration of the $13,000 a year per child, and the children don't have to pay any taxes on it, and you as a business owner get the write-off. So the money stays in your family. You pay your kid $13,000, they pay no taxes, but your kid got $13,000. That means your family got $13,000 that you didn't have to give up.
You just kept it away from Uncle Sam.
You just kept it from Uncle Sam and kept it with the Morrisons or the Badus or whatever your last name. Right now in the chat, everybody put your last name in the chat. Even y'all ghost accounts. Just do it. Be brave. Even my ghost accounts. Put your last name in the chat right now. No one knows your first name. Don't worry about it. Put your last name in the chat right now. This is who we do this for as the CEOs of our last name. So I just gave you guys some enhanced game. And this is why I love this interview style, because I've been in business so long, I know what questions to ask that maybe others may not know. So we just got some advanced game. Not only do we get our children 7 to 18 years old for write-offs, but if you have a child under 7 years old, if they are an actor or model for your business, a spokesperson for your business, they too can get $13,000 a year in tax-free revenue for your family. So you got a few babies. My brother Reddy just had 2 twins, 2 girls. Those 2 girls are $26,000. His son Alex, another $13,000. That's $39,000. So 3 kids is $39,000 of write-offs through your business and keeps in your family.
Exactly.
So now
imagine, Jay,
go ahead.
This is money that you probably were already going to pay in daycare, right? You're already going to pay it at daycare. So instead of you paying the daycare, why not let them pay their own daycare?
Let your kids pay the daycare. Tax-free.
Yes,
I love it. So again, family, I'm going to keep reminding you. King Jeff, give me this real quick. So I use this example. I like $100,000, right? Mm-hmm. So if I made $100,000, right, after all my write-offs, right, everything's written off, and I now have $100,000 of taxable revenue, right? How much would I normally pay the IRS from that $100,000?
You would take about $25,000.
About 25% of $25,000. So family, this is going to be our learning lesson. Please follow me. I'm giving y'all, telling you, this stuff blessed my life. And I didn't get it to like my 30s, honestly. I didn't even get it when I was like a millionaire at 27, 28. I just was good hustling. But I got it 10 years ago or so in business. Look at it like this. I wish I had a whiteboard right here. Next time I'm bringing a whiteboard up. But let's take $100,000. If you make $100,000 of revenue, the IRS, give or take, is going to bill you $25,000 out of your $100,000 of revenue. You're going to owe $25,000 in taxes, right? Follow me. Got me? $25,000 in taxes if you made 100. Now, let's say you have 3 children and you use this strategy and pay all 3 children and that money stays in your family. That's now $39,000 to write off. So we got our $100,000 that you would have got taxed on, but now we're going to subtract $39,000 from that, right? Which leaves you $61,000. So now instead of the IRS taxing you 25% on $100,000, which is $25,000, the IRS has a new bill to tax you at because of your write-offs at $61,000. So King Jeff, at $61,000, is it still 25%?
Yeah. So at $61,000, you might drop down a bracket or so, right? So now instead of 25%, we're dropping you down to 20%. So now you're at $12,000. 12,200 to be exact.
So now, if you have 3 children and use this one strategy, you now pay 20% tax bracket on 61,000, which is, what was that, $22,000? No.
So let's call it 12,200.
12,200. So from this one strategy, if you made $100,000 a year in your business, and you have 3 children, infant to 18 years old, and paid them accordingly $13,000, subtracted 39,000, you'll get taxed on 61,000 now. The money's still in your family, and your tax bill is now 12,200 versus 25,000. So that means you just saved $12,800 you kept in your family of money you would have gave Uncle Sam, plus you just saved the 39,000 on top of that. Still in your family. We're talking about keeping more cash for all. I'm making it plain for you. This one strategy just saved $12,800. Now, mind you, you went on a family vacation that same year. So now you went on a family vacation and you spent $9,000 on a family vacation. But you use our boardroom strategy on that. And so now you have $9,000 more to write off from your $61,000. So now you're going to get taxed on 52. So your tax bill went from 100,000, 3 kids, 13,000 each. Now it's 39,000 minus that. So now your tax bill is 61,000. Oh, then you went on vacation, $9,000 write-off for that because our boardroom strategy. Now you got 52,000. Oh, but you rented out the home you own to your business for 14 days at $1,000 each. Let's subtract that 14,000. Now you're at 42. You're at 38,000 of taxable income. So now the IRS is going to tax you on 38,000 versus 100,000 because of these 3 strategies we covered already, and we still got 2 more strategies left. So at 38,000, is it still a 20% bracket?
Now you drop down to about 15%.
Now you got a 15% bracket, so it means the IRS is not going to tax you 20% of that income or 25% of that income. You're now at 15%, which is what, King Jeff? $5,700. So with these 3 strategies, if you are a $100,000 earner, you went from paying $25,000 in taxes, your tax bill, to $5,700 in your tax bill. Maintaining your family $19,300 you would have gave up without this lesson tonight. If you want to get with my partner, my brother, King Jeff Badu and his firm, and learn what I've been using at least the last 10 years, I've been nice with it. The last 10 years, 20 years in business, if you guys want to get this game, I just showed you how to save $19,000 for your family as a $100,000 earner on 3 tax strategies on YouTube and IG Live. Get with this man. Let him look at your situation. And he's affordable, and he's honest, and he's integrous, and he's a man of God. Get with this man. Taxes.jmorrisonacademy.com. Go schedule your consultation. The link's in my Instagram bio. The link will be on YouTube after this video. Taxes.jmorrisonacademy.com for the schedule your consultation with his firm and with his team. I just saved y'all $19,000 in real life. Let's go. Number 4, King Jeff.
Yes, sir. When it rains, it pours, right?
When it rains, it pours.
All right, sir. There you go. So let's just say, I mean, as a business owner, you got to get around sometimes, right? You got to drive to places. You might be a real estate agent. You might be driving to showings, or you might be driving to dinner with your spouse. You might be going out to meet with a client. You might be taking some road trips with the family, whatever the case may be. Let's say that you bought an SUV or a truck, right? You know, you're like, man, I'm making good money now. I'm a 6-figure earner. But now I need a car so I can get around, right? A decent car at that. So let's just say that I bought a Range Rover, right? Bought a Range for, let's just call it 40,000, right? What I can do is I can basically claim a tax deduction, assuming I bought it after 2022. If I bought it before 2022, it would be a different story. But if I bought it, let's say 2023, this year, this month, a $40,000 Range Rover, I can claim up to 80% of the purchase price as a tax write-off in year 1, right? So in 2023, I can claim 80% of that 40,000 as a tax write-off. The remaining 20% gets spread out over the next 4 years or so.
40 years?
The next 4 years.
Okay. And is it only for SUVs? Is it any car? Are there stipulations to the type of car, year, model, make of the car, or just only after 2022?
Yeah, so basically it's so the reason why I brought up the 2022 is because it used to be 100%, right? Under the Trump Tax Cuts and Jobs Act passed in 2017, bonus depreciation was afforded to used items like used vehicles. So we can write off 100% of the cost of a truck or an SUV. So the 80% applies to SUVs or trucks. Basically, cars are a little heavier. Cars that can fit more people, basically.
Gotcha.
If it's not a truck or SUV, if it's like a four-door sedan, then we can usually write off about 20K, right, give or take about $20,000. So that, let's just say I bought a Mercedes, not the G-Wagon, but let's say I bought a C-Class for $30,000, right? I can get a $20,000 write-off essentially out of that $30,000 essentially.
Gotcha. Is it a percentage of sedans or a flat fee?
For the sedans, it's a flat fee. So let me give you the exact amount. So 2023 car depreciation amount. So essentially, yeah, so they actually did go ahead and reduce it, right? So it used to be 19,200, but for some reason, the tax code is starting to get a little sticky, right? Let's just say. And so right now, when we look online, right, if we look at the bonus depreciation amount, right now it's actually showing that it's 12,200.
Is that for used cars only?
So that's basically going to be for used cars, right? That's ultimately the amount for used cars. So 12,200, right, for used cars. And then if it's essentially with the bonus depreciation aspect, what we can do, if it's an SUV, right, if it's a heavy duty vehicle, then we can usually write off up to 80% as bonus depreciation, right? So bonus depreciation is what we're talking about here.
Yes.
For the vehicle. Right?
Gotcha. And I saw there's like, is it a particular weight limit? I mean, can it be a Ford Explorer? Does it gotta be an Expedition? Like, is there, how big?
Yeah, I mean, it's honestly, it's all pretty much all SUVs qualify, and then all trucks. I mean, the weight technical is 6,000 pounds. But if it's an SUV or if it's a truck, then the IRS basically deems it as a heavy duty vehicle.
Gotcha. So whether it's a $40,000 Range Rover or a $140,000 Range Rover, we can write off 80% of that vehicle.
Exactly. Or a G-Wagon, right? That's another popular one.
And does it and is that only for if I bought it under my business name, or could it be me buying it under my person for my business?
It can be under your personal name too, but ideally when it comes to taxes, we want to protect ourselves, right? Part of protecting your last names and building for your last names is protecting the wealth, right? So if you have it in your business name, and God forbid something happens, maybe you strike a pedestrian, now whoever you struck can only take what the business owns, not what you own personally, right? So it is best for assets to be in a business name. I mean, if it's real estate, ideally it's a land trust, right? I'm sure that's a story for another day. But if it's a vehicle, then we can put it in an LLC and not have it in our personal name.
Absolutely, that's what I do. So family, another one. 80%, that's used cars, right? Not new cars. Used cars. Trucks,
It should be a
SUVs.
new car. Yeah, it should be a new car too.
Okay.
And so let's call it new and used cars.
Okay, so 80% of any SUVs purchased after 2022, we can get up to 80% write-off on those SUVs. So, if you went out and bought a new Escalade or a new Denali, and it was 80 grand, you can get 80% of that as a first year write-off. That's $64,000 as a write-off, right? So let's go back to our last scenario, right? Tax strategy. I'm gonna start fresh real quick. And forgive me for not having my trusty. I got a whiteboard right there. I'm just not gonna roll it around. I'm gonna use my notepad right now. So family, remember, we're a $100,000 earner. At $100,000, we're at 25% tax code. That's what they're going to charge. They're going to tax us on. That's $25,000. So our job as entrepreneurs is to reduce our tax liability or taxable income, right? Or taxable revenue. We want to reduce that 100,000 so Uncle Sam taxes us on less, but we want to do it in a way that it still benefits us and our family and all that. So, with our strategies we talked about today, we got one more left. One more left. Guys, share this, like this, comment. This is the gospel right here. It's a financial gospel. So, remember what we said? We can write off a vacation. So you go to $9,000 vacation, $3,000 vacation. Let's call it a $5,000 vacation. As a board retreat, as long as you have that board meeting for at least 10 minutes with your letterhead, time and date, where you're doing it at, who you're doing it with, and what you hope to accomplish in the company, plans, strategies, hires, fires, all that, and you sign it and date it. If you do that for 10 minutes while you smoking your pen or drinking your drink or doing what you do on your vacation, you take 10 minutes to do that, you now got a $5,000 or whatever your vacation costs discount plus anybody you brought with you. You can literally deduct from your $100,000. So let's just say you brought somebody with you, paid for their trip, and all together you spent $10,000, 5 and 5. Well, that $10,000 you take off your $100,000. That's a write-off. Now next, we're going to also, because we're homeowners, and if you're not, you should be, take the program. We're going to get $14,000 deduction for renting out our home to ourselves, to our business, at $1,000 a day for 14 days. So it's another $14,000 minus our 100 we get. Cool. And then we have a few children. Ken, you know that child you've been paying child support for all these years? Figure this one out. Get this right off. Our children under the age of 7 can be models and actors or actresses in our businesses and get up to $13,000 a year income that is tax deductible to us and tax-free to them. Money still in the family. Children 7 to 18 years old can get paid for same thing, model, actress, or whatever else in the business, or admin or cleanup or whatever. And now you get that for your children. I have 3 daughters. And I've used this strategy as well, just so you know. But let's say you got 3 children. That's $39,000 of tax deductions for your 3 children from your $100,000. Right? Boom, we got that one. And now we're on to 4. You went out this year for your 3 children that you got write-offs on, and your wife who you took on vacation and got write-offs on, and the business that you leased your house out to, you got write-offs on, and now you guys bought a Denali for the business, an SUV, for $80,000. Well, you can now write off $64,000 first year of that Denali, and the rest spread out over 4 years, the other 20%. These are all deductions that you get. Let's go to the last one, and I'm going to come back and add up how much deductions you would have on $100,000 of revenue after this 5th strategy. Go ahead, King Jeff.
Absolutely. All right, King Jeff, I do want to correct myself. And there's a 4th strategy. You asked about something that's not a SUV,
yes,
right, or heavy duty. So the first year deduction for that is $20,200, right? 2023
for non-SUV.
For non-SUV 4-door sedan, $20,200. That's for new vehicle, used vehicle. There are ways that we can increase those numbers, but let's just call it $20,200 if it's a 4-door sedan base.
Gotcha.
I want to make sure yes, sir.
That's accurate. See, it's integrity. You ain't got to be right all the time, y'all. You correct yourself, it's okay. Go ahead, kid.
Yes, sir. All right. This last one is the true only reason why I personally haven't paid income taxes is 2017. All right. This is near and dear to my heart. This is my most important tax strategy of all time.
Wow.
And I saved the best for last.
The most important tax strategy of all time. Damn.
Yes, you can't get better than this.
Yo, hold on. We need a drum roll. I need everybody to share this real quick. This is the most important tax strategy of all time. We done did the boardroom strategy, the Augusta rent your house to yourself strategy. We done did the pay your kids strategy. We done did the write your car off strategy. And now we get to the most important tax strategy of all time. Share this, please. Stop being selfish. Put the thumbs up. It gets the algorithm up. Put the thumbs up, YouTube. Put the thumbs up, Facebook. Get the hearts. Let's like this. Let's share this. The most important tax strategy of all time. Let's go.
All right, King Jay. So I know you love this one because you're a real estate guy, right? But imagine we got all this money now. All right, we saved 20,000, 30,000 from Uncle Sam. Well, what should we do with that money? You gotta create assets. Right? The only true way to grow money is to invest the money. So why not invest it in one of the most powerful, if not the most powerful assets on the planet, what we're all standing on right now. Our foot is literally standing on this thing right now, known as real estate. Right? For me, the most powerful asset on planet Earth, this God-given planet.
I disagree.
The Lord of the land.
Psych.
Right? It's always important to be the Lord of your own land.
Yes, sir.
Right? And so with that being said, you take all this money that you've made, you sling in real estate, whatever the case may be, and now why not buy the thing that is the most important asset? Real estate, right? Rental property, something that you rent out to other people. And when you do that, basically what you can do is claim up to 20% of the purchase price of the rental property as a bonus depreciation tax deduction through a strategy that we call cost segregation. All right. And so cost segregation allows you to accelerate or speed up the depreciation expense on a building, a rental property, where you can claim up to 20%. It used to be 25% last year, but now it's 20% of the purchase price as a tax deduction against your other sources of income. Right?
Bars. Here's wise bars. And King Jeff may have some more for you. I'm going to tell you, as Big Homie, as King J, as Mr. Real Estate, why this is bars. Because you could deduct 20% of the purchase price of just say a $500,000 rental property, but it could be a rental property that you've got 100% financing or put 10% down on or 20% down on. So you could spend 10% down, 50 grand down on 500,000 or 10,000 on 100,000, but get a write-off of 20%. Or get it 100% financing and get a write-off still for 100%. So you can literally syndicate it, use other people's money, get the 500,000, no money out of pocket, but then you get the write-off of $100,000 on your $500,000 rental property you put no money down on. The GOAT of tax strategies. All time.
Yes, sir. All time. This is the one right here. I mean, there's no tax deduction bigger than this one. The biggest D word in the tax code, depreciation.
Depreciation.
Right? And here's the thing, get this. What your lender will do, so let's say you got your tax return, right? You wrote off everything. You paid no taxes that year. Great job, you did great. When you go to your lender to qualify for a mortgage, what they're gonna do is add back the depreciation to your income for mortgage qualification purposes, as if you didn't lose any money basically that year, as if you're taxed on the full amount if you add back the depreciation. But you weren't
This is big for entrepreneurs because many of you do all these tax write-offs, right? On your 100 grand, your 200 grand, your 500 grand. You write everything off, but then you can't get qualified for any loans because all your income, you wrote it off. The difference in this tax strategy as a write-off is depreciation. And as King Jeff just said, banks will add back depreciation to your earned income. So if you made 100 grand in a year, but then you went out and bought a $500,000 property and you depreciated 20%, 100,000. That means you got taxed on 100,000 minus 100,000. You got taxed on zero in a whole year. But to get more property, you can add the depreciation back on paper to go qualify for more property and do it all over again. Those are bars. So let's I want to go here with it. So I told you guys, $100,000. You're taxed at a 25% tax code. That's $25,000. We got ourselves a $10,000 write-off for a vacation with you and who you flew out, and you did a boardroom strategy and board retreat, and you got that tax strategy. You got $14,000 from the lease to yourself strategy from your home, the Augusta strategy. Then you got $39,000 for $13,000 deduction from 3 of your kids, right? For the kids work for you strategy. And then you got $64,000 for writing off 80% of your Denali for the new car, used car, 80% write-off strategy. And now we're talking about if you went out and even bought a $200,000 4-unit duplex, whatever, you'll get 20%, 20% depreciation on that $200,000. That's $40,000 of write-offs on a rental property you bought. That's earning you money. The interest is also a tax deduction. The closing costs and the maintenance on that, and we don't even get into all of that right now. So if I were to add up all of our deductions right now, we got 10,000 plus 14,000, that's 24, plus 39, that's 59, and 4 is 63, plus 64 is 127, plus 40 is 167. So we did every strategy that we learned tonight, modestly. We get $167,000 of write-offs on $100,000 worth of income, leaving you zero tax liability to the IRS with $67,000 to do what, King Jeff?
What you can do is basically, if you got $67,000 left as
losses,
that loss, right? You could pull the Trump method. This is how Trump avoided paying taxes.
Do that Trump
carry
move.
The loss over. Carry the loss over to next year. And if you make a profit, then use that loss you just made or you just generated to wipe out the profit next year so that you don't have to pay any taxes on that profit.
It's a loss carry forward, guys. If you use all these strategies and you max your losses, you now would have paid $25,000 to the IRS or somewhere in between as your tax goes down. But if you get rid of all of it through depreciation and tax strategy, tax mitigation, tax minimization, not avoidance, right? If you get rid of all of it and you have more depreciation left over, in this case $67,000 left over, you can carry that thing forward to the next year. So next year, if you make $300,000, you can immediately subtract $67,000 from your $300,000, and now you're getting taxed on $233. My pen ran out for some reason. You get it. $233 you'll get taxed on versus $300,000 because your losses carried forward to the next year. Already in the game. Create cash, keep cash, grow cash, protect cash, pass it on. This is how we protect our cash and pass it on through strategies like this. Family, tap into this man's firm. I personally use them. This is why. This is the fruit. Pay less to IRS, keep more for your family, but do it legally, compliantly. So you don't complain about the tax code. Don't complain about the wealthy, oh, them and they. Oh, they knew all of this. No, you got the information too. It's right here. It's taxes.jmorrisonacademy.com away. You got to ask the same access that Trump and all them use to not pay. Why the hell you don't pay taxes? It's unfair. Because they're using the code that we all have access to? It's time for self-accountability. Them and they ain't gonna come save us. Ain't no fairy dust sprinkled down to come save us. We gotta save and repair ourselves by preparing ourselves. So you have a tax preparer here, a CPA here, a tax strategist here, bookkeeping in their firm, financial advisory in their firm, all that. Tell them King J sent you. Go to taxes.jmorrisonacademy.com to book your consultation now. Lock it in. And whatever you retain or spend and retain in the consultation, it goes towards your tax planning services or your tax preparation services. So whatever you guys invest to get in line with him, it goes towards your tax plays anyway. Get the information. We gave y'all free game on live. Queen Jada, you got questions there? What you doing over there? Doing some stuff. We good? All right, love it. King Jeff, I'm full. This is more than even I thought we were going to get. And I know this stuff. And I've been doing this stuff. But this was amazing and a great first off for us. I think we definitely got to try to come back in a couple of weeks and go on some real estate game, or I think we should go real estate heavy, since it is the greatest business of all time, greatest industry of all time, greatest hustle of all time, greatest asset of all time, real estate. Maybe we'll come back in a couple of weeks, but I really appreciate you carving out time tonight to talk to me and our audience. I learned a lot. I'm gonna be dropping some Instagram videos and YouTube shorts on this stuff, TikToks. The whole world needs to know this. This is how we bridge the wealth gap, even a playing field. But it starts with information, education, and application. You gotta apply it. So any last words for us? Anything you're thinking about that maybe you want to add to, or just any sounding last words? As I'm literally full. I'm I'm happy. This is good. This is good stuff.
For sure. No, KJ, thank you, right, for having me. And thank you to the audience, right? Thank you to IG, YouTube. What you listened to tonight is very important, right? This is literally about, maximizing or accelerating our wealth through saving money on tax. The most important thing you can do tonight is not what you just listened to. Right? Listening to this is one thing, but taking action and actually implementing is a whole another thing, right? Actions always speak louder than words. So you learn, but now it's time to apply and take action. Right? So I do encourage you to click that link, right, in Jay's bio. Feel free to reach out at any time. My social media at JBadu32, at JBADU32, right? So you can follow me, tax tips, right? King Jay and I, we work together. And just click that link, right? Click that link, visit that site, because it's a lot. I mean, when I learned this stuff, I was like, I gotta show it to the world, right? I gotta teach the world. I've written books. I have a lot of stuff that's out there that helps people get educated. Our firm was founded on education. So I really hope you take what we said tonight seriously. I know we were joking around and all that, but these are real tax strategies, and taking action is the most important thing that you can do tonight.
Listen, we can lead you to wealth, but we can't make you drink. Drink the wealth, fam. This stuff works. This is not like hocus pocus. We just got to execute. And it is only top 5. Imagine what more is unveiled that you have deductions and depreciation for that you don't even know. You don't see. There's some things that we know. There's some things we know we don't know, and there's some things we don't even know we don't know. You don't even know you don't know it. You don't even know it to know you don't know it. That's where the sauce is found. And that's why I hire experts, because this thing, I'm smart. I'm very, very smart. I'm a genius, actually. But I'm smart enough and genius enough to know that there's a lot of stuff I just don't know. But I'm willing to learn and willing to apply it, and it applies to my 3 daughters, and we got our write-offs. We do. He did them. It applies to my Range Rover. We got our write-offs. I know, because we did it. It applies to my home, because we got our write-offs. I know, because we did it. I did not do the boardroom retreat one, though. I didn't do that. So I'm learning too. I have no problem being a student, but I'm gonna add it to my arsenal. And depreciation, of course. We definitely got our real estate depreciation as well. I want you all to have that same level, but more, just more. This is the top 5, and you got the greatest of all time in the top 5. So tap in, guys. The link's in the bio, taxes.jmorrisonacademy.com. And for anyone that wants to learn real estate with me and get on weekly consultation calls with us, or coaching calls, get the digital version of our 12-step curriculum and book. With the digital version of this, comes with 6.5 hours of video lessons on wholesaling, flipping, landlording, crunching numbers, ROIs, evaluating deals, books, assessments, glossary, all that. We give you this, plus about another 10 hours of lectures and weekly calls. You guys can get that at thebeginnersprogram.com, right? Thebeginnersprogram.com for you to learn real estate and to build this wealth, to get to that $100,000 plus earner. But otherwise, whether you're a wage earner, W-2, or self-employed, or whatever, King Jeff and his firm can help you. So even if you can't apply all this, you don't own a business yet, and we'll get you there, and you're just a wage earner or you're a tax preparer, go see an expert, and then get game so that expert can help you become more advanced. If you're going to someone that's in your same income class to prepare your taxes, they can't help you with much. If you're paying for cheap service, guess what you're getting? Cheap service. And this guy's not cheap, he's just affordable, but also thorough. So I need you guys to understand that a lot of times we cut corners on the things that matter the most to us, and you thought you saved $75 by choosing this cheap tax guy or this guy. You thought you saved $75, but you just lost $3,000 because he didn't know about the right strategy. Don't trip over pennies on your way to pick up dollars. Tap in. Thank you, YouTube, for logging in. Thank you, Instagram guys, for sharing and being a part of this experience with us. We'll be back in a couple weeks. I'm going to do more what I do, pouring, serving, teaching, going in. But guys, go check my brother out, my personal tax strategist. I'm giving you a layup. Literally, I'm throwing as an alley-oop, I'm lobbing the ball, and I put the ladder there. All you gotta do is just drop the ball in. You ain't even gotta dunk it, just drop it in. Go get your bread, go get your paper, go get these tax earnings and savings and depreciation, and get more than this top 5, because this guy's full of knowledge, all right? So tap in, taxes.jmorrisacademy.com. Run there now. I know his calendar's gonna be filling up. Slots are gonna be available for weeks if you guys don't hurry up. Get in there, book your consultation. All your consultation fees go towards your actual tax services. Don't trip about that. Stop getting in the way of yourself. You already got $1 million worth of game in real life right here on this Jay Morrison educational podcast, or whatever I'm calling this. I don't know, Masterclass Live, whatever. It worked. Thanks, King Jeff, man. Enjoy your night over there, Chi-Town. We are out live from the Black House. Peace.
Amen.
I'm gonna save those.
Yes.
Awesome.